755% revenue growth in a single quarter. A stock that swung from $18 to $82 in less than a year. A technology that could make today's most powerful computers look like pocket calculators. IONQ is one of the most talked about stocks in the market right now. Today we're going to explain exactly what this company does and lay out honestly both the bull and the bear case. No hype, no fear, just the facts. IONQ is a quantum computing company. But what does that actually mean? Classical computers, the ones in your phone and laptop, process information using bits, which are either a 0 or a 1. Quantum computers use qubits, which can be 0 and 1 simultaneously, thanks to the laws of quantum physics. That allows them to solve certain types of problems exponentially faster than any classical machine. What makes IONQ different from competitors like IBM or Google is its approach to building qubits. IONQ uses trapped ion technology, literally trapping individual atoms in a magnetic field, to isolate them from background noise and use them as qubits. This has allowed IONQ to achieve a world record 99.99% 2-qubit gate fidelity rate, roughly one error in every 10,000 operations, sharply outperforming rivals who have yet to breach the 99.9% threshold. In practical terms, IONQ sells access to its quantum computers through the cloud via AWS, Microsoft Azure, and Google Cloud, and also sells physical quantum systems directly to governments and research institutions. Its Q1 2026 revenue came in at $64.7 million, representing 755% year-on-year growth. Approximately 60% came from commercial customers and 35% from international clients. For context, IONQ was the first public quantum company to exceed $100 million in annual GAAP revenue. The bull case for IONQ is built on 3 pillars. First, the revenue trajectory is real. IONQ raised its full year 2026 guidance to between $260 and $270 million, with remaining performance obligations, essentially future contracted revenue, growing 554% year-on-year to $470 million. These are not press releases. These are signed contracts. Second, the technology lead. IONQ recently sold its first 6th-generation, chip-based 256-qubit system, a significant hardware milestone. And IONQ has advanced to Stage B of the DARPA Quantum Computing Initiative, a U.S. government program that validates the technology's real-world potential for defense and national security applications. Third, the SkyWater acquisition. IONQ is in the process of acquiring SkyWater Technology, a U.S.-based semiconductor foundry. The pending SkyWater acquisition would give IONQ the ability to manufacture its own quantum chips domestically, reducing dependence on external suppliers and giving it full control of its hardware stack. SkyWater shareholders have already approved the deal. Now the bear case, and it is equally serious. First, the valuation is extreme. IONQ's market cap currently sits around $19.4 billion, well above its one-year average of $15.2 billion. At roughly 400 times sales, the valuation remains a major overhang. Even after 755% revenue growth, you are paying an enormous premium for future potential that has not yet been delivered. Second, the losses are still large. Despite the revenue growth, IONQ is not profitable. The company continues to burn cash as it invests heavily in hardware development and expansion. JP Morgan and Morgan Stanley are both staying cautious on the stock despite the strong quarterly numbers, two of the most respected banks on Wall Street choosing to wait for more proof. Third, the competition is not standing still. IBM, Alphabet, and Microsoft are all aggressively pursuing quantum computing with nearly unlimited resources, and new pure-play competitors are entering the public markets. IONQ's own market cap has swung from $8 billion to $27 billion and back within a single year, a level of volatility that reflects genuine uncertainty about how this technology race ends. IONQ is a genuinely fascinating company. The technology is real, the revenue growth is real, and the contracts are real. But so is the valuation risk, so are the losses, and so is the competition from companies with far deeper pockets. What is clear is that quantum computing is no longer science fiction. It is a race with real commercial stakes. Whether IonQ wins that race, gets acquired, or gets overtaken is a question that even the smartest analysts on Wall Street cannot answer today with confidence. What you can do is understand what you are buying before you decide anything, and hopefully today you understand it a little better. Hit like if this was useful, and subscribe for more deep dives like this one.